We continue with our Bank of Canada reaction with interviews with experts on various topics. Now we move to the housing market. Home prices across Canada have steadily declined since the Bank of Canada began to raise interest rates to combat inflation. Let's go now to a housing market expert. He's Steve Saretsky, Vancouver Realtor at Oakwyn Realty. Steve, your takeaway at something that I think has surprised almost all Canadians who were focused on the Bank of Canada today.
Yeah, definitely a surprise of the 100 basis points there, right? I mean, largest move since what, 98. So, I mean, I think it's just more implications for the housing market. It's kind of what we're focused on. It's been a pretty tenuous housing market for the last couple of months. And I think that the big takeaway here is what it's going to do to the variable rate mortgage segment, because at the end of the day, we've seen a huge cohort of people. More than 60% of purchasers over the last year and a half have been going variable rate mortgages, right? So that instantly bumps you the mortgage stress test higher as well. So that's going to reduce purchasing power. So overall, I think this is going to impact the housing market quite significantly.
Right. So let's just magnify that analysis. We'll expect the big Canadian banks to raise their prime rates by a full percentage point apiece, correct? And then we'll see the variable rate mortgages increase by a full percentage point apiece, correct?
Yeah, exactly. So you're kind of typically looking at so before this announcement, your typical 5-year variable rate mortgage was, give or take, you're about 3.2%. So that probably puts that now pushes your variable to about 4.2, which means you're stress tested 200 basis points higher than your qualifying rate of 4.2. So now you're getting stress tested effectively at about 6.2, 6.25%. And so that's about 100 basis points higher than what most people were getting stress tested at the minimum, which was 5.25, just a week ago. So that, again, will reduce that purchasing power, and that will ultimately feed through to the housing market. And
what will we see? Will we see slower, lower transaction volumes and lower prices?
Yeah, I think so. I mean, if we look here, I'm obviously located in Vancouver, but, we're looking at, the Fraser Valley, which is the suburban housing market there. We had a 22-year low in home sales. Greater Vancouver, one of the slowest Junes we've seen over the past 20 years. I mean, even if you zoom further out and go to the GTA, chatting with colleagues over there, I mean, they've had back-to-back months with 20-year low in home sales. I mean, that's certainly not normal housing activity. So to suggest this is merely a slowdown, I think, is understated. This is a significant cooling in the housing market.
And is it too early to talk about a rebound, when we might see a rebound in the Canadian housing market?
Yeah, I think it's way too early to be talking about rebound. I mean, I think that's potentially a conversation at some point in 2023. But I think for the back half of this year, I think we're going to continue to see very weak sales volumes. And we are seeing a reduction in prices, and I suspect that will probably continue.
Are fixed income mortgages becoming more popular now, and what are they priced at these days?
Yeah, your fixed rate mortgage, we saw a slight reduction as that 5-year yield came off a little bit, but you're typically hovering around 5 to 5.2% on your typical 5-year fixed mortgage. So again, there's really nowhere to hide right now if you're a Canadian borrower.
How broad-based is the pressure on Canadian housing, at least where you are in the Vancouver and surrounding area? For instance, condominiums, are they reacting any differently than single-family or semi-detached homes?
Yeah, I mean, I think that it's always important to sort of flesh out, what you're buying and where you're buying. So the largest decrease that we're seeing right now is in the suburban housing markets. That was where most of the froth was, the pandemic era driven liquidity boom. And so you're seeing sort of from the February highs, I would say your typical detached house or townhouse product in that suburban market's down anywhere from about 10 to 15%. If you go more closer into the city core, your detached house is off about 10%. And we're seeing a little bit more strength in the condo market, just I think an affordability thing. But we are seeing some easing in the condo prices, suburban markets about 5 to 10%. And it's closer into the city, it's about flat.
This is by no means over. The market, of course, expects the Bank of Canada to hike rates again. There's some debate about how often into the future and when the bank will stop hiking. We just spoke to somebody, an expert, a fixed income expert at BMO Capital Markets, who expects the rate hikes to extend well into next year. What does all of this do, those expectations? What's it do to the buyer psychology or indeed seller psychology in the housing market?
Yeah, I mean, if you look at the seller psychology, interestingly enough, so far right now, we haven't seen a flood of new listings. In fact, listings were actually down year over year over the past several months. So there hasn't been a panic to the market. What we've really seen is just a complete sidestep from buyers, basically just opting to sort of wait and watch this. And so that's why you're seeing these, 20+ year lows in home sales. So that's slowly allowing inventory to build. But that inventory is building because buyer demand is so weak. It's not building because people are running to the market trying to offload product. So that's kind of one thing we're looking for. But I do think like all these, conversations, the Bank of Canada's kind of put out their own housing forecast. CMHC's come out with a housing forecast, I think a couple of days ago. I think they're wildly optimistic in terms of the impending slowdown in the housing market. I think it's going to be much more abrupt than anyone's forecasting.
Can you elaborate? Why are they wildly optimistic in their forecasts?
I just think we're already seeing 20+ year lows in home sales, and that's going to feed through. And I think if you look at it, CMHC was out yesterday saying, national home prices might decline 5%. I mean, I personally am involved in the GTA, Vancouver market, and in the Calgary market, and I can tell you they're already off more than 5%. So, and I would say those are your probably three largest housing markets in Canada. So I think we're already there, and that the CMHC's forecast is predicated on the Bank of Canada getting north of 3% on their overnight rate.